General Mills rallying along with the broader market today, now up more than 6% since reporting earnings just last week. The company beating analysts' expectations as home-based consumers lifted sales. But that growth has slowed since the spring. Joining us to talk about it, General Mills CEO Jeff Harmening. Jeff, welcome to the show. Thanks for joining us.
Thank you. Good to talk to you again, Sarah.
Jeff, we're already starting to see cases tick up in this country and in some places hospitalizations as well. How are you gearing up for a potential second coronavirus wave this fall?
Well, for us, I'm not sure the first wave ever ended. Our sales were up 10% in the first quarter, which we feel good about. People are eating at home quite a bit. We've been gaining market share. And so for us, the key is to make sure we keep our supply chain going strong. And we have done that. And all of our plants are up and running throughout the world. We've added internal capacity on platforms like cereal. We've gone out and procured more capacity on areas like soup. And so we are ready and running very well right now.
Yeah, you did have a very strong quarter. And what was interesting on that day that you reported, it was kind of a muted share price reaction. And there still is this persistent question from investors around these food stocks like yours who continue to do well about how long it can last. Eventually, when our economies open up, eventually when we hopefully have a vaccine, whether any of this strength can continue and whether the comps are just going to be way too difficult to lapse. How do you answer that?
Well, it's very clear to me that in the short run, and I mean over the next couple of quarters, demand for food at home is going to remain elevated as restaurants are closed and kids are either learning from home or in a hybrid model, and people aren't going back to their offices. So I think that some may be underestimating the short-term demand and what it can mean. In fact, on our first quarter earnings call, we indicated that our North America retail segments, which serves consumers here in the U.S., is going to be up high single digits, so continued strong growth. After that, we've done a number of things to make sure that we maintain demand. Our household penetration, so the number of households we reached, is up in 9 of our top 10 categories. The repeat rates, the rate at which people are coming back to those foods, is up. And we have surveyed the consumers who have come into brands like Yoplait yogurt and Progresso soup and cereal, and they've been very satisfied. And so we think that perhaps some people are underestimating the level of demand that can continue even after the pandemic starts to ease and people start to eat out a little bit more.
Where do you think inventory levels, though, are for most of your main customers, most grocery stores?
For most of our grocery stores, their inventory levels are up from where they were a few months ago by a few days, and we suspect they go up by a few more days this fall. I can also tell you that our inventory levels in a number of categories have been replenished throughout the summer. So even though demand did slow to 10%, we have maintained our production capacity and been running at full capacity on all our lines since the pandemic hit in March. And so inventory levels are pretty decent right now, and our plants are running very well.
We've been talking all day on CNBC, Jeff, about the ongoing stimulus negotiations, what's happening there, what's not happening there at the moment. I mean, no question it padded consumers' pocketbooks in the past few months. Have you seen an impact since the stimulus money has started to fade on what kinds of brands people are buying or the volumes and the way they're shopping? And do you expect to see more of that as that money wears off?
We haven't really seen an impact on our business yet. I'm sure that some retail brands and businesses have, but in the food business for us, the at-home consumption and the fact that consumers are not going to the offices or going to school or going to restaurants, that is a bigger driver of our business for us, frankly, than the stimulus has. And so our brands continue to do well, particularly our consumer brands, even the ones that serve furry members of the family. So our dog food business is also performing quite well.
So just to expand on that, Jeff, a little bit, presumably, therefore, you do acknowledge, despite some other sentiments in various earnings release, that when we do fully reopen, that demand will slip back a bit if it's been a factor that you're saying has helped demand whilst people stay at home and don't go to the office.
I think it's inevitable that at some point in time, people will begin to eat out at restaurants more. And so I think that's the case. But the question is demand going to be high relative to what it was before COVID for food at home? And I think the answer to that is going to be yes, because people rediscovered that the kitchen is the heart of the home. They've enjoyed doing some baking. And I think it's pretty clear to me, as it is many others, that we're all not going back to the office the same way we were before. And so there are a lot of meals that are served out where you could be serving breakfast or lunch at home. And so while I wouldn't anticipate over the long run that demand for food at home is going to be elevated at the level it is now, it feels to me as if it should be elevated beyond what we saw before. And don't forget that food at home consumption tends to do pretty well, in fact, very well in a recessionary environment, which feels like kind of the environment we're in now.
Shepard Smith here. Thanks for watching CNBC on YouTube.